The world's biggest IPO in more than a year has begun trading in Shanghai. As you can see there, 64% up in the first few seconds of trade. Let's cross over to Bloomberg. Stephen Engel for the latest. Steve, what's going on?
Well, the numbers are changing rapidly. It's up to 7 Chinese renminbi right now, a gain of more than 60% on day one. China State Construction Engineering making its trading debut in Shanghai after raising more than $7 billion last week. This was the biggest share sale since Visa went public in March 2008, the largest, I should say, in the world since Visa went public, also the largest since last autumn when PetroChina had a share sale. It was in high demand, Kathy. It received 1.85 trillion yuan, $271 billion worth of bids for this IPO. That is more than the market capitalization of Norway, Russia, and at least 48 other advanced and developing nations. Demand indeed. State Construction is China's largest home builder. It's taking advantage of the stock market rally so far year to date to raise money for real estate projects as prices here, home prices, have boomed. The IPO is the 5th since China last month ended that 9-month moratorium on new share sales because of a market slump and a property market slump. Investors turning really kind of a blind eye to the fact the offer price values the company at more than 51 times earnings. The state-run company's profit fell 44% last year because of a slowing property market. Also, we had those rising raw material prices early on last year and higher tax payments. It's banking, though, on a sustained recovery in the residential home market in China, with the government stimulus measures here helping lift sentiment and unleash a lot of pent-up demand for new homes. The Shanghai Composite Index, quickly, let's bring up that chart. We all know it. It's risen 72% this year. It is down, though, I might add, today, down about 1%. Still a long way to go to reverse that trend today, though. It's on a 5-day winning streak, if you don't include today, and has risen 9 of the past 11 sessions. Right now, trading at up more than 7 yuan, at 7 yuan 12, 7 yuan 13, a gain of more than 70% on day one. Kathy?
Yeah, pretty stellar number there on day one. Thanks, Steve. With us for more on the IPO rush in mainland China is Daniel Jim, Managing Director at Tripod Management in Hong Kong. His firm is a fund of hedge funds. Good to have you with us, Daniel. Pretty stellar open for state construction there, but I guess no surprises.
Yeah, I think, I was just doing a quick check earlier. The wildest expectation has been actually up to 10 yuan. So, if any of those kind of prediction is to look at, probably people look at a little bit even more, to that. But that, again, is pretty much the retail, the punters. Valuation-wise, as I'm sure that most of you have checked on that, and people are expecting around on the upside of around 5 to 550. That should be pretty much stretched already in terms of, the general consensus valuation. So again, a lot of speculation on the first day, and is basically the same story over again.
Same story over again. So after this first trading day where we're seeing a huge gain, we're going to see the market or the stock fall tomorrow, right, like Sichuan Expressway.
Yeah, I mean, there is a conspiracy theory right now in the market saying that because of that sort of no sort of limits being set on the first trading day, a lot of the institutions actually refrain from selling on the first day just to let the retailers push it up to see where they can actually go. Because from the second day onwards, you actually have a limit down, right? So actually, if you can push it up 200, 300% or something like that, you got a lot of time to actually unwind your position. If you look at Sichuan Expressway, I mean, reports have it that actually close to 100% of the buyers on the first day, they were all private retailers. And so that explains a little bit as well as what we have been seeing. And people are now actually pretty much interested to see whether this one will be going down the same route. Obviously, this is like 10 times much bigger than the Sichuan Expressway. But still, there's quite some conspiracy theory right now in the market. And obviously, I think the government is watching very closely as well, because the last thing you want is just the start of yet another IPO rounds, and then, the normal people, out there are starting to get hurt. And that's definitely not something that they want to see.
Steve, I hear you got a question?
Good morning. Yeah, this is Steve Engel up in Beijing. Okay, a lot of people have been talking perhaps that the Shanghai Comp is in bubble territory, but what are your thoughts on the property market? It was long depressed, but then all of a sudden really surged March, April, May, June to what some people might say are bubble levels. Still, there are lots of empty apartments and homes and a lot of capacity coming online, at least here in Beijing.
Right. I mean, I think that is much like when you're talking about, valuations in the stock market versus, what we've been seeing in it as well. I think every time when you have a relatively loose monetary situation in China, you have the local asset, is actually going up like crazy, which is always the same story because choices are very much limited out there. So I think it is pretty much expected, and I think unless that we see the government come in to do a big U-turn in tightening the monetary situation again, both the equity market and the property market is still going to sort of stay strong for a little while. So this bubble may actually be carrying on for a little bit longer than what people have thought.
Do you expect relatively loose monetary policy then to continue as long as export sector remains so depressed?
Right. I think if you have been reading what most of the government officials has been saying recently, I think definitely that is the plan, right? Until the time when they are confident enough that the actual economy itself is slowly picking up space. I mean, right now what we've been seeing is mostly just asset prices going up. And, in terms of the real economy, I think it's still too early to call whether we have actually see a U-turn.
Daniel, I wanted to pick up on the IPO frenzy here because, as you mentioned, the government's trying to prevent retail investors from getting hurt, which is the reason why they put up a ban for about 9 months until they lifted that back in June. But it doesn't seem to be working, even the repricing of those rules.
I think, again, after a few rounds of that, I mean, I won't be surprised that the government some sort of expected this to happen, so long as it is staying within the limits that they have, the previous expectation. So again, with a benchmark deal like today's and also the couple of the securities houses that probably will be coming in, it is important that you see a good rally at the beginning, but not to the extent that there is a sharp U-turn eventually. Everybody is talking about whether this deal today will be compared to PetroChina, which the last time was exactly the same thing with such a big deal, and then that actually marked the U-turn of the A-shares market in general. So I think that is the concern, and I'm sure that the government officials are looking very closely to that as well.
Okay, Daniel, just stick around. We still have a lot to talk about this IPO frenzy, including China Everbright for sure. And there's more Market Movers openings coming up on The Trade. Keep it here on The Trade. Back to Daniel Jim of Tripod Management in the studio now as I look at my screen, 601, 668CH, 89% higher. And we're looking at a $10 per share, aren't we? We're a little bit far out, $7.91. I guess it's a lucky number, isn't it, as well?
We'll see how it goes.
But the next biggest one, and what the markets are looking for, is China Everbright Securities and China Merchant Securities, raising about $1 to $2 billion US dollars.
Yeah, I think right now the only one obviously confirmed is Everbright Securities, which will be already going for some sort of an offering, and then the next one in line is probably going to be a Merchant, Securities as well. I mean, it is an important sector, obviously, because now when the markets sort of get back to its normal pace, that it's important to get all these also sort of get them listed into the market and get them exposed to international sort of investors eventually. So I think that's a very important step for the whole sector. And if these two, which are the relatively bigger ones, are going to be successful, then I think the latecomers are going to, have some pretty good sort of reception as well by the market.
Yeah, but what is normal pace? I wanted to bring that up because the markets, as we know, the Shanghai Composite has already doubled since November. What is normal with that?
Well, if you look back, that's actually normal, right? For China, it's always a sort of, let's say, what we call the boom-bust sort of cycles. It is, again, a big country, and as we all know now, liquidity, it's really much abundant, and choices are limited. So, every time you open the floodgate, money comes in. And until the time that the government sense that, trouble may be coming again, let's try to put on some stops. And so the stop-go sort of management, unfortunately, I think it's really here to stay for quite a while. Until the time the market got really open to, fully, sort of international investment and comfortability of the currency and everything, then you see a lot more checks and balances coming in, obviously, with the development of the futures market, and then more and more institutional investors to come in. At the moment, we're still playing on this game. I mean, it is, a market with Chinese characteristic, if you would like to put it that way. And I think the government are pretty much aware of that fact as well. So
in other words, what you're saying is you're expecting this bubble to go on for a little longer.
I think so.
Given that the government's also being very accommodating to its monetary policy.
Exactly. I think that's really the thing to watch at the moment, barring any unexpected things happening in China, be it on the political side or whatever. I think it's definitely the monetary side that one has to look at. And I think the government is not going to go for a big U-turn and tighten again until they are comfortable that the mainstream economy is slowly picking up space again. I think that's definitely what they want to see. And until that is happening, I think they will tolerate, that sort of bubble once in a while. That's how, we see it at the moment.
Yeah, but when we go by history, whenever the big IPOs are listed, it pretty much tells the investors that the markets are getting topped out.
Right.
So if these big guys come out of the markets, then that means it's time to get out, isn't it?
Yeah, I think, again, you tell that to an institutional investor, they probably get what you're actually talking about. But if you look at, who is actually moving the market, especially on the first day.
The retail investor.
Exactly, which to them, the whole understanding of this is still very different. I think investment, in its truest sense, is not still, pretty much in the minds of all these people. I mean, they probably look at it as yet another lottery. Right, and so everybody is in it, and it seems like the payout is pretty good, and their friends just made money in the last 2 deals, so they all piled in. And another thing is that they have cash. It is very interesting that this is a market that a lot of these retail, you call them punters, they are not living on leverages, not like in other parts of the world. So these are the actual cash. They have the money to play, if you would like to put it that way. And I think for now, until really we see something that comes into the market and sucked out a lot of liquidity for one reason or another, it's really something that, unfortunately, the Chinese government have to manage it on a case-by-case basis.
I guess we can expect this IPO frenzy continuing on. As we can see in today's listing, we're seeing it up about 89% on China State Construction doing pretty well, reaching that $10 a share that you're expecting. Thank you so much for joining us, Daniel Jim of Tripod Management here in Hong Kong.